Hi, this is Bill Wood with Discipline Trading Decisions. It's time for the weekend update for the S&P 500. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for September the 6th, 2016. We had a 3-day weekend. We're covering the S&P 500, so let's take a look at the monthly chart. Okay, monthly chart, we were in a 2-year balance. We have broken out on mediocre volume, and once we broke out, we're just kind of hanging out up here. We're in a 2-month balance up here. Of course, this month just began. On the weekly, again, 1, 2, 3, 4, 5, 6, 7. You could say a 7-week balance. On the daily, you can see that we peaked below this range, and then we came back into range. Generally, when that happens, your target is the opposite end of that range. Let me just show that to you again. We were in this range here. We peaked below the range, came back in. Generally, the target is the opposite end of the range. My target for a while now has been around 2,200. I don't know if we'll make it up there. We have a lot of energy up here. Whichever way we break out of here, we should get a decent move. Okay, on the market profile, you can see from, I don't know, somewhere in this area to this area, there has not been much trading in here. This area has been rejected, and as you see, this is exactly where we came up to. So on this particular day, Friday, we have a poor high, which means that the market probably got long, too long, and so there was some long liquidation. Tested all the way down here, filled the gap, but couldn't get the market to drive lower, and then just ended the day right around the point of control. So you have a poor high here, you have a poor high here, poor high here, poor high here. That makes me think that the likelihood is that the market is going to come up here and repair this. That doesn't mean that it won't go down first. So what happens on Tuesday? Let's say that we open up in this area. We're very comfortable in this area. We could go back and forth most of the day and just balance. If we open on the downside, if we open below the range, I would imagine that we're going to test this high volume node down here, and either test this high volume node down here and test this high volume. Okay, so when we open on Tuesday, what can we expect? Well, if we open within range, we're very comfortable in here. We could just balance out here on Tuesday. If we peak up above this range again, come back in, I would caution longs because you may get some liquidation. If you open down here out of range, it might test this high volume node that's right in here before it retraces, or it may retrace and then go lower. We have a good low down here, poor high. Poor highs up here. So I'm still thinking that it's going to reach my 2200 level, but that may not happen anytime soon. So as you can see, this is the composite volume here. The high volume node is here, 2179.25. You have a low volume node up here, 84.50, and a low volume node down here at 21.72. So that's the first thing that we're going to see if we can break, is either one of these low volume nodes. If we do break to the downside, we have a high volume node here out of this range here around 21.67. So depending where this opened, it could open here, test a high volume node, maybe even test the bottom of that range and come down, or come up and test this high volume node, get some added inventory. I think if it can get above here, that there's not much volume up here to keep it from taking out new highs. This is like the last line of defense down here. If you want the market to go up, you hope that that will reject out of there. So the most likely would be balance in this area. If we do break to the upside, there's not much volume in the way to keep us from breaking new highs. If we open above range, it may be an open drive day. If we open below range, we have this high volume node to contend with, and that may bounce between here and the low volume node. It may come all the way down here and test this supply zone. And if we break that supply zone, then you have a lot of energy in here that is wrong, and they would have to liquidate. So that's my take on the market. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinetradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. I appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.